Hi, and welcome to the February reporting season update. I'm Gareth Brown, one of the portfolio managers here at the Forager International Shares Fund. It has been, for the most part, a pretty good reporting season for our investments. Reporting season is a time that investors often stop and take stock of the companies that they're looking at, and it can be a time of sharp volatility. This season has been an unusual period of sharp volatility and I'd say extra discernment around various investments. We've seen that within our own portfolio. We've had 6 stocks jump more than 10% on the day of reporting, and we've had another couple that have fallen more than 10% when their results have come out. Today we're going to do a quick run through of the results from some of our largest investments, and to help me do that I have Senior Analyst Chloe Stokes. Hi Chloe.
Hi Gareth.
Let's start with Meta, one of the larger positions in the fund until recently at least. This is the owner of Facebook and Instagram. If you cast your mind back 3 or 4 months, this looked very much like a mistake. We got the Q3 results in October 2022. We were closer to selling than buying, but the stock really started getting hammered, and I think that's one of the areas where we can bring a psychological or behavioural edge. We turned around, we didn't sell any stock, we actually bought some more at the bottom. Fast forward 3 months, we have the Q4 results come out. If you could give us a quick run through.
Yeah, well, we were really happy with the results. Revenue was up in constant currency, and they produced their second kind of 2023 cost guidance reduction since those Q3 results that we saw in October. They also announced a $40 billion buyback, which we were excited about, and we're very optimistic around the prospect of Reels, which is Facebook and Instagram's short form video content, and it's their kind of answer to TikTok. Engagement's going really well within Reels, and at the moment it's a headwind to revenue, but they think it's going to be at least revenue neutral by the end of this year or early next year. So lots of green shoots here.
And does it justify the price movement we've had since? The stock is up more than 20% on reporting day. And also, what have we done with the position since?
I think it does justify the price increase, but it's less that result on its own justifies a 20% pop in the price, and more that there was so much pessimism priced in and the stock had declined so much in the lead up that I think it was just much too cheap. People absolutely hated this stock for a while there, and as you mentioned, that was part of the opportunity. So since the results, we've sold around half of our shares.
Yeah, so it's a smaller position for the fund now, but it has been an important contributor over the past few months.
Definitely. And on to another important contributor over the last 5 years. It's data erasure software business Blanco, listed in the UK. They also recently reported their results. How was that?
Well, very good, I would say. Blanco acquired a business called WhiteDrive last year, which I think is going to be a stellar acquisition. Backing all that out to look at the underlying business that they've owned for more than 12 months, still very good result. 2 of the 3 divisions grew organically about 15%-ish, ignoring that acquisition. The 3rd division, mobile, I think was a bit disappointing, but not unexpectedly so. We hope that business will grow again in future, but it's not something we're reliant on. And also it's a strong half for margins as well. Do keep in mind that the first half is always more profitable than the second half of this particular business.
And how did the market take those results?
The stocks was up 13%, or is up 13% since results day. It was actually up more on results day. We haven't sold any shares, and it remains a top 5 position. I think one of the important insights to understand here is that a lot of the biggest and most respected technology companies in the world still rely on shredding of their hard drives to dispose of data. And it's a very archaic process. There's a lot of pressure on them to change that. For example, in October last year, the Financial Times had a hit piece on it, naming names of some of these big companies. It was very interesting. There's massive pressure on them to change. A lot of those big companies are already Blanco customers, but they use it for one division or they use it in one geography. So we think there's a very easy sales pitch over the coming years and even decades to win more and more business with these huge accounts. So that sort of underwrites the sort of 12 to 15% sales growth we expect over time, and a few extra points on the margin as well. Now let's move on to another more recent position of ours. Yeti is a business that makes very durable ice boxes and drink vessels. I have an important piece of anecdote to share with you there. Santa Claus brought 3 drink bottles to our house in December. I can report that all 3 of them have survived 2 months of real world testing with brown children, and they are very, very harsh on their drink bottles, so I'm pretty stoked about that. Tell us about the results.
We love to hear that, Gareth. Yeti actually had a pretty awful month, and it wasn't because of the results. So early in the month, before they reported their Q4 results, they released an announcement to investors that they had noticed a fault in some of their soft cooler products, and in certain extreme cases this fault could be quite dangerous. Now, there haven't actually been any injuries from the fault that they've identified, but they're being very proactive about this. They've kind of taken it to the American Consumer Commission. They're going to do a product recall. We think this is the right move to protect the brand. The brand is the most important thing in any consumer business, and especially in kind of a high quality business like Yeti. Right. Exactly. So we think that they're doing the right thing, but there are definitely going to be some impacts. We've already seen them in Q4. We had some provisions against costs. There's obviously going to be some inventory written down. We're also going to see a pretty big impact on revenue in Q1 to Q3 of 2023 while they can't sell these products, and they're still going through the process of redesigning the faulty bit of the soft coolers. In terms of the Q4 results though, without that impact, they were fine. Revenue was up 10%. We were really happy with that. Margins were exactly what we would have expected. And it's been a tough environment out there for retailers at the moment. We've seen multitudes of businesses reporting revenue down for the current period, expecting revenue for the next period to also be down. And Yeti's continued to grow in this environment, still expects to grow next year despite the issues that they're seeing with the product recall. And we think that's just really great evidence that this brand is as high quality as what we thought it was.
So hardly the kind of start you'd hope for in a new position, but I took a lot of positives out of that recall. They've gone a lot further than they needed to. This is the sort of pain today, gain tomorrow kind of activity you would hope to see from management once they get thrown into this sort of position. So I think that's a really good sign here. And as you said, it can still grow. It'll probably grow a little slower than we might have expected, but hopefully in time it can reach its full potential. So there you have it. 2 good results, 1 not so good. That's broadly the ratio we've been seeing it in the fund over the past few months of reporting season. About 2/3 of businesses really delivering the way we want them to, and maybe 1/3 not quite up to scratch. With the markets up significantly the past few months, it's been a time of chopping and changing in the portfolio. We're taking profits on stocks that have come full fruition, and we've been putting new ideas into the portfolio to keep the portfolio cheap. We'll update you on some of those new ideas in the months ahead. Thank you very much for your time. Thanks, Chloe.
Thanks, Gareth.